This is oil, all right? This is black gold. And to me, this is capital deployment. Most investors, they just really want to use that as a tool to reduce taxes, create income. What we do is focus on what's economic, and the tax benefits are given. It's deeded title real estate. It's like owning a block or parcel of land. It's yours. We simply manage it for you for free.
You're basically putting your money to work, and it's just going to keep producing a check. And that check just keeps rolling.
It's more about compounding our opportunity by using you as my financial partners and co-owners to go buy more and more minerals. Now is the time to buy, and that's really where the advantage comes between me finding it and you participating with me.
All right, it's another week, another wealth webinar, and today we're talking about gold, but not the shiny blocks or bricks that you know of. We're talking about black gold. You guys ever remember that old TV show where, the guy's walking around, he shoots at a rabbit, hits the ground, and, that black gold comes out of the ground? That's what we're going to be talking about today, and we're going to be talking about it with one of the industry's leading guys, and that is my friend Troy. So get ready, folks, because with oil comes the opportunities, also speculation, and also awesome tax opportunities. And really kind of how this whole webinar started, just to give a little intro, I've got a really good client that I work with that right now is looking at oil primarily for the tax advantages. So we'll hit that. And pairing the tax advantages up with the same time when she's doing a Roth conversion. So the tax advantages of the oil investments will wash the taxes for converting the traditional Roth or traditional IRA to the Roth. It's a win-win, and that eliminates for her the speculation stuff, because listen, the money she would basically lose if she lost in oil would be money that would have went to the government anyway. That's a really cool strategy. But I'm going to rewind, and I'm going to turn this over to Troy. Troy, welcome to the Wealth Webinar.
Hey, thanks for having me again. Very nice seeing you again. We haven't talked in about 30 days, but a lot's happened in that 30 days, both on the economy and within the oil and gas industry. So honored to be here, honored to present, honored to answer questions, whatever comes about. But this is going to be some very interesting times over the next 24 months, specifically in oil and gas. So glad to be here.
Awesome. Well, Troy, one of the other things too, Stephen and I, we talk about oil quite a bit, but we always talk about it in a kind of almost a negative capacity, because it is such a, there's a lot of scumbags in your industry, man. I don't know how else to put it. There's just a lot of people literally in that industry that are just not good operators. And I've seen it multiple times. I've seen a lot of people lose in oil. And one thing I love about you is you've been in this game a long time. And you've got an amazing track history, an amazing reputation. One so good that literally your clients, I don't want to speak out of line, but many of them are billionaires, 100 millionaires, multi-millionaires. So they're trusting you, and they do their due diligence. They look at this industry and who's operating very carefully. And that's what the first thing with you that I saw. That's why I had you on the podcast. And then that's why you're here is you've just got that piece. And above everything else, I mean, we can't take the risk out of oil and the different things because it is speculative, but we definitely can take the risk out of the operator, and that's you. So I'll turn it over to you. If you want to share your screen, do the presentation, and let's roll. Yep. This is fascinating stuff.
I will address while I'm getting this loaded, Chris, one of the reasons why you have scumbags in oil and gas, and I blame the oil and gas industry for that. It's because there's never been any respect by the oil and gas industry for capital. The Exxons of the world, they're big, they're behemoths. And so in 40 years, I started in 1985, and in 40 years, what I've determined is there's capital, there's oil. No one's ever bridged that relationship between the two. So at the very beginning of my career, I said, what I'm going to do is educate the capital on how oil and gas works. And then I'm going to go source what I believe is the very best oil and gas opportunities. But by bridging it with education, it eliminates, in my view, the risk of a sponsor failure, fraud, Ponzi schemes, et cetera. And I've watched 40 years of complete destruction by these promoters, liars, crooks, and thieves. But then the investors themselves have to take some of that responsibility because they foolishly invest. So today's presentation in 20 minutes or less will be just about how you can maybe look at the industry a little bit different light, because a lot has changed in the last 10 years, which has diminished the risk from the asset, but it always falls back on the sponsor or the person or the expert you're looking to invest with. So let me rock and roll, go through this. If I get going too fast, just give me a thumbs down or let me know. But folks, I get up about 4:30 every morning. 1 cup of coffee is like jet fuel. I don't eat until about after 2 or 3 o'clock. And so you don't want to give me a second cup of coffee because I live my life that way. So you're going to get 1 cup of coffee version, which is usually 2x on speed. So I'll try to remember that. First off, we mainly as a company, Eckert Enterprises, decided 6-7 years ago, we wanted to be at the top of the food chain in the energy space. We've been drilling oil and gas wells since 1985. So what we decided is we like what we see in tax benefits, because when you drill, you can take 80 to 100% of your investment and take that as a tax deduction against your ordinary income the year you make that investment. That's great, but you got to make money. I don't want to give you $1 million and save $370,000 in taxes and lose the other $630,000. That's been the history of oil and gas. You invest, you get a tax write-off, you never see the other 63% because of bad investments, bad wells, et cetera. So we do have oil and gas exploration. We love the tax benefits, which defer those taxes and let us create wealth. But we decided to move up the chain. And what we wanted to do was we wanted to be the house. We wanted to have Exxon and Oxy and Warren Buffett and his investments. We wanted them to be the tenant, and we wanted to be the landlord. And how do you do that? You buy the very oil and gas mineral rights under the ground that they are drilling on, and they have an obligation to send us a check every month as a royalty income with no obligation, no risk, no liability. And I want multi-billion-dollar, the largest oil companies in the world, to pay me money every single month for the next 25 to 100 years. We moved into that position about 7 years ago, and I can tell you the results have been phenomenal. We'll get to that later. Let's get going. First off, just a little background on myself. I started off in the investment space in 1985, developed my own company in 1991 called Eckert Investment Services. And over the last 37 years, I have what's called Eckert Enterprise, a family-run energy business. I have about 50 employees here at the company. I just bought a large natural gas pipeline business in December. We now own 1,600 miles of pipeline in the Gulf of Mexico. We're the second largest gas transportation system in the Gulf of Mexico. And our customers are people like Shell Oil and the various major producers in the Gulf. So we have a very, very broad background, and we bring that to our high net worth investors by saying we understand from the time seismic is shot all the way time till it gets to the processing plant, how that food chain works. So we knew where we wanted to position ourselves in that food chain. And as a mineral owner, we're at the very top. Exxon cannot drill a well on private property without leasing a mineral from somebody like you and I. And their first obligation is to pay us as mineral owners, or the very lease they took out expires and we get all their wells for free. Bankruptcy doesn't matter. Financial distress doesn't matter. They pay us every month first. So that's the food chain Troy Eckert wanted to be at after 40 years of a career. Now let's get advancing. All right. So first thing we got to think about is, what is a natural resource mineral right? So there are surface rights, there's air rights, there's mineral rights. Mineral rights is everything below the surface. Not everywhere in this country has oil and gas. There's 9 big geological basins buried that contain the majority of the oil and gas reserves in the United States. It's about 200 million net mineral acres out of about 3 billion acres that are included in this country. So this is a finite opportunity. It's a finite position where you can buy. It's not like you can buy it anywhere. So because of that, you have to have a decision. Do you happen to have a relative born with land in one of those basins? Not likely, I didn't. So now I want to own them. How do I do it? Well, it's a tradable commodity that exists today because why? We move from vertical drilling, a 7-inch paper plate hole, praying to God they hit. I didn't want to buy minerals then because it was as risky as drilling. Now we're talking about these geological features the size of today's Grand Canyon sitting underneath Pennsylvania and North Dakota and Wyoming and Texas and Oklahoma, et cetera. And now we're not worried about whether we find oil and gas. It's who's going to drill it, who's going to produce it, how do we get a free ride? I love the word free. It just means I don't have any exposure, but I get an economic benefit. That's the important thing about natural resources and mineral rights is we own 100%. We're just allowing Exxon to develop it for us for free and give us 12.5 to 20% for free. You can buy investments in mineral rights because it is real estate through a self-directed IRA. It's available through a 1031 exchange or your ordinary investment account. They're real, tangible assets, deeded and titled in the courthouse. When you look at the country, the United States, everything you see in pink was not around. It geologically was there. We didn't have the technology to extract it. In about 1997, George Mitchell with Mitchell Energy decided he was going to perfect how to get this wet shale type formation to produce oil and gas because it was just the most organically rich. Didn't know how to do it. So we used software, hardware, technology, and we decided, let's go horizontal. Let's take this well down this paper plate, go sideways 1 or 2 miles. Now we're exposed to massive amounts of the reservoir. but how do we get it to flow? Well, we're going to jackhammer. We're going to take sand and water, pump in sand and water, natural product of the formation. We're going to efficiently crack it where it wasn't cracked previously. Boom, we've got the solution. Long horizontal well bores, naturally sand injected with water fracs. Now we have commercial quantities of oil and gas. Everything you see in pink, which was not economically viable 15 years ago, now is why the United States is the #1 oil producer and the #1 LNG exporter in the world. And we did that less than 15 years. Why? We're sitting on Saudi Arabia type reserves in our own country. We just now have to figure out how to extract it, which they have. You and I don't care. We just want to be the mineral owners. This is what it looks like from a 3D view. This is Oklahoma in particular, where we focus probably 90% of our acquisitions. It is a Grand Canyon loaded with oil and gas, covered up over millions of years, and we know where it's at. We're not worried about dry holes. What we want is economic performance. Which operator is most proficient? Which jockey rides the best horse that wins the most races? And I want to know that jockey is going to win 9.9 times out of 10 times at the track. So we focus on the operator, Exxon, Oxy, Continental, EOG. We focus on the heart, the core of the place. So we're not worried about being on the fringe. And that opportunity exists because why? The average investor has no idea how to buy a mineral. The average private equity doesn't have the full string of expertise to know why they drill, where they drill, the economics. They just know there's minerals. So we have developed a proficient team that understands not only the drilling side, the tenant side, but now as the landlord, we know how to buy those minerals under the best producing assets in the entire basins that we focus on. Why does somebody sell? Well, if I'm a farmer, rancher with 300 acres in Oklahoma, I need money to pay off my farm, my ranch. I want to put my kids in school, my mother in a nursing home. I can't sell the ranch. It's been my family for 100 years. So what do? I sell 50 acres of minerals below the ground to Troy Eckerd. Troy Eckerd buys them. Guess what? I still have 250 acres of mineral rights. I still have my ranch, my service rights, and I paid off my debt. It became a monetized asset, not recognized until shale horizontal drilling evolved over the last 15 to 20 years. Every single one of those yellow arrows represent an example of these buried organic reservoirs that were buried 100, 125, 150 million years ago. We knew they were there. We knew they were loaded, didn't know how to make it flow. So what do? We access these billions of barrels of oil and trillions of cubic feet of gas all across the country by simply using technology. The same technology that makes Elon Musk's cars work, the same technology that sends spacecraft to Mars. We're using all this through triangulation, through computers, through organic material, drill bits that are being controlled from offices in Denver, in Dallas, and Houston, with guys at computer screens guiding that bit like a video game. This is not like the old days. This is perfection at its finest. The oil and gas industry is one of the #1 buyers of software and hardware of any industry in the world. What's also really nice about this, it's not just one shot. You don't get one dart to throw at the board. This is stacked formations loaded with oil and gas. And when you own the mineral right, you own it from the surface to the core of the earth. I don't care what they find in natural resources. If I own the mineral, they owe me money for it if they're going to harvest it. So for every barrel of oil, every molecule of gas that's pulled out, I get my share. If I'm in a 1,200 acre unit that has a horizontal well drilled, whether I own 1 acre or 68 acres or 124 acres, I either own 1%, 5%, or 10% proportionate. It doesn't matter where within that acreage that oil's pulled, because I share it equally based on how much I own, which means I don't have to be the smartest guy in the room. I just got to be in the room. All right. Now, when you take a look at it from a visual perspective, what you're going to notice is wide open space. It's environmentally friendly. Why? Very small footprints. Before horizontal drilling, you see a white pad site about every 5 acres spread all over that green pasture. Today's technology allows us to take up a 3 acre pad site and drill out what? We drill out 1 to 2 miles in all directions with a minimal footprint. Environmentally, one of the best oil and gas exploration plays I've seen in my career. So not only are we conforming, not only are we doing a great job, but we've now set this country on a path of energy independence. Guess what you get? As a mineral owner, buying tier 1, top-of-the-line minerals, you'll own an asset that can last 50 to 150 years in economic value with distributions every single month. So guess what? I want to own real estate, deeded and entitled, with billion-dollar tenants, cash flow every month, no exposure, no expenses, no liability, no environmental liability. They do all the drilling for free. That's what I want. They drill it like this. It's a cube drilling. They go down and say, look, we're going to drill 4, 5, 6 wells at a time. You get to sit back and just enjoy the profitability and the checks that come every single month as they develop your minerals. All you're going to get is revenue. You're not going to get bills. This is probably one of the more significant parts of this presentation. We started off with this entire dotted circle as reserves in place. Based on old technology, we got only out what was in the red on the right side. We then started looking at what can we prove up and drill today based on technology and economics. Well, that's what's in that little bitty dark blue. Then we said, wait a minute, we're improving this every day. What's economically viable? Well, that's in the next level of blue, which is we can still access that based on technology and the price of commodities today. But what's really available? Well, what's really available is technically this amount of the reserves in place can be produced. In Oklahoma, you have about 50 million barrels of oil per square mile, up to 250 million barrels per square mile of oil and gas in place. Up until horizontal drilling was done, only about maybe 0% of the shales was economical. Today, it's only 8%. So we're only getting very little compared to what's there. So if I own an asset and it says, today I can make 10 to 20% of my money, but I'm only getting 8% of what's available, what happens if I get 10 or 12 or 14% available? What does that do to my economic returns? It escalates in an exponential fashion. So this is about low risk, top of the food chain, real estate assets I can own with a 1031, a self-directed IRA directly, and I can bypass the public market influence because guess what? Whether we go to war, whether there's a recession, whether there's inflation, every single day this country uses 40% more oil than we produce. We are a net consumer. So I don't care what happens in the Middle East. I don't care what happens to Saudi. What I know is we consume about 21.5 million barrels a day. We only produce 13 million barrels. I love owning an asset that 100% of every two-legged mammal in this country burns one of my barrels of oil or molecules of gas every single day. This is an example of North Dakota that I've been involved in for 14 years. These companies would go in and they would drill a single well to hold the acreage. When you drill a well, it gives you the right of in perpetuity development. That's what Exxon, Oxy, EOG, all these majors did. They said, let's go drill one single well. Now it's time to take and harvest that orchard that we planted. Let's figure out what we do. Let's go in and drill a second, a third, a fourth, a fifth well. Well, the way to make money in minerals is you buy it at the beginning before it's developed. I don't want to go buy a 98% occupied apartment. I want to buy one that's sitting in the right spot, that's underutilized, undermanaged, and let that growth occur. In oil and gas, I want to buy when there's one or two wells, knowing there's going to end up being 6, 12, 80 wells being drilled in the future. That is the strongest economic value of natural resources. What do we do here at Eckerd? We do all the work for you, in-house engineers and geologists and landmen and staff. Because why? Eckerd buys the minerals before you do. We own them. We go down and buy the minerals at the best price, offer them to our partners. That allows you to participate as a co-partner with us. I'm not selling you. I'm telling you what we do. I want you to understand. Chris is about education. This is not selling you. When I look at what the opportunity is, I don't have to be the smartest guy in the room. I use my 40 years of expertise to say, how do I be in the room with the smartest people? And that is the difference. I don't want to try to outsmart EOG or Exxon. I want to know what they're doing and where. How do I know that? Because everything is digital. Everything they do today is reported online. I can scrape that data. I can look at data. 6, 7 years ago, I couldn't tell you what Exxon did. I didn't know how they drilled the wells. Now I can take every operator and I can measure what they do with my engineers to see who is the most proficient engineer, which then tells me what's the most proficient oil and gas. When you have oil and gas revenue, 15% of your revenue doesn't get taxed. The federal government says, thank you for drilling oil and gas wells. Here's an 80 to 100% write-off when you drill. Whether you drill a well or you own minerals, we're going to give you a 15% reduction in tax liability. Why? It's a depleting resource, kind of like depreciating equipment or depreciating real estate. So if I make $1 million this year, I'm only paying tax on $850,000. And Chris, you were right. If I got high income from my investments or my business or my entrepreneur, I want to drill wells to lower that tax bracket, but I also want to buy a lot of minerals because that's great 1099 income. So now I can use both tools. I take my income, I drill wells to balance it, and I try to figure out how to manage. Essentially what I say, it's not a deduction, it's a deferment. Because I got to tell you, with horizontal wells, they run about 98%, if not 99% success rate. They don't drill dry holes. So I'm not really getting a deduction because the IRS is giving that to me because I've lost money. I'm simply saying, I'll take income this year, I'll drill wells, I'll buy minerals, I defer the tax, use the IRS's money to buy more minerals, more working interest, and I keep doing that. And I've been doing that in my career for 37 years, almost 38 years this year. All right, so let's go through this. Now, 13 wells were drilled in these 4 sections of land. 13 wells coming in between 500 and 1,000 barrels a day and a tremendous amount of natural gas. It takes about 6 months to drill these wells and hook them up. It takes about 90 days to get your check. So if I bought something in January 1st, I'm going to look for a check starting in about, I don't know, the third quarter, fourth quarter of this year. But here's the kicker. I get a check every single month for every molecule of gas and every barrel of oil sold the previous month or the previous month before that. And then once that check starts, I get a check now for the next 25 to 75 years off those wells with no cost, no management fee, no expenses, no liability. I don't know of another asset that does that. What we want to tell you as the listener education-wise is there's a lot of crooks in oil and gas. There's a lot of crooks in minerals. There's a lot of crooks in drilling. Why are they crooks? Because you can't go to a single source online and go, how does it work? What's the cost? Where's my Redfin? Where's my appraisal? You don't know. And they love the fact you don't know. So Chris doing a fantastic job inviting somebody like myself online to say, Troy, teach us. Tell us how to play the game. And if you know how to play the game, the first thing is, it's the who. Forget the deal. It's the who. If you don't have the who right, you're going to lose. I have geologists, petroleum engineers, Exxon attorneys as my partners. Why? Because they looked at the who and they said, who is this person that's going to give me the advice, lead the pan, educate me, teach me, transparency? Who's going to do that? Because the wrong person, you run right off a cliff. When you're done and you look at your minerals or you look at working interest or being a direct owner in oil and gas, it's really simple. What asset can I own that has 100% consumption rate? You're 40% over demand and supply, and you have geopolitical risk at an all-time high. We have 2 wars going on, China moving ships to Taiwan. It's ungodly what we're seeing. So if I have to look at how oil and gas, as it relates to inflation, recession, global interference, geopolitical risk, you're sitting on a powder keg of upside potential for oil and gas. Just look what happened in 2022. Russia starts a war, oil goes from $72 to $129. We just had an attack on our military 3 days ago. Oil went up to $77. Every fundamental says what we see in the next 5 years puts oil well over $100 a barrel. That may be good, that may be bad. Not good for the economy, great for those of us that own oil and gas, mineral rights, and working interest, right? I am about 60 years old. I'll be 60 this summer. I know I look like I'm 20, but that's not true. The wrinkles give it away. The truth is, I don't want cash calls, liability, exposure. I don't like joint venture where somebody else manages my money. I want to own hard assets that give me a check 24/7, 365 days a year. Our company now has 7,000 wells producing under the minerals we own that we've acquired in the last 5 years. We have 24 hours a day, 7 days a week, with about 25 of the largest oil companies in West Texas and Oklahoma producing our wells. I never have an expense. I never have a bill. Bankruptcy doesn't apply. You must pay me first. I don't know of another asset I can do like that. It's really kind of, Chris, messed up my whole investment strategy. I'm like down to like, I measure everything by minerals, and it's not what I like to. I used to be an entrepreneur that tried all kinds of things. Now I'm like, I'm pretty much eating lobster. This is all I want every day, right? The thing I want you to remember is royalty income has a simple analogy. Royalty comes back from the king and queen, back in the days when you have these monarchs. The reason it's a royalty is you own it. You allow somebody else to develop it and use it, but they owe you your share of distribution, which is normally 12.5% to 25% every single month, no matter what the price of oil and gas is, no matter what the volume. When they plug that well 100 years from now, it gets the last barrel out, we get our cut. That is the greatest asset to transfer to your kids and your estate because they can't screw it up. When you give them your mineral rights, all they have to do is take the check every month, not go do crack cocaine and waste it on hookers. They just got to pay attention and use that money to reinvest. So what I love about it for my family is it's a great asset to transfer. If I buy to my self-directed IRA and then I transfer it for a Roth, you get about a 40 to 60% discount because the way it's analyzed and appraised by third-party appraisers, right? So it's a great tax tool. It's a great IRA tool. It's a great asset to own because of what it provides. And at the end of the day, it gives you those zero exposure to capital calls and expenses. I look at minerals like a safety deposit box. I buy gold every month. I've got traditional real estate. I've got other investments. I like to spend my money different ways. But I would say probably 90% of my assets are in oil and gas because I understand the business. That's where my focus is 24/7. Last year, we sent out $55 million distributed in 2023. Looks like I missed a zero too, but it was 55 million, right? We estimate 75 to $100 million in distribution going out this year. We got about $750 million of capital with only about 60% of our wells paying because we bought so much last year. 7,000 wells generating revenue. That's 7,000 individual income sources. It's safe, it's reliable, it's monthly distribution. So if you think about what you want to do, this is me. I want to sit on a beach. I want to enjoy life, and I want 7,000 wells making me money every single day. That's pretty much what oil and gas looks like for minerals. The drilling side is just a little bit different. You take a little more risk, you drill every day, but I'm drilling the same 7,000 wells with a 99.9% success rate, but I want to be in the well to get those tax write-offs, and I just want a bigger chunk of ownership versus minerals. Either side, we're killing it in both directions because we have decided to align ourselves with the smartest, most efficient oil companies on the planet.
Wow. So
that was one breath. That might be a record for me. One breath, I think.
That was only 1 cup of coffee. I'm thinking, all right, I'm on my 2nd cup. Like, what would this do to you?
Not
That was
good.
fantastic. But I mean, the biggest thing, like obviously, a lot of us on here, like you hit on two really important things. You hit on, passive income. I don't think there's one person out of the 150 on here that does not like passive income.
Right.
And the second thing you hit on, which is one of the two certains in life, is taxes. We're all looking for the legal path to how do we pay less in taxes, but still not, go anywhere gray. And that's, I think, one of the most attractive things for a lot of folks when it comes to oil. And you hit on it a little bit, but can we just go a little deeper? Like, Zach Newberry's on here. He runs our fractional CFO program, and he works with a lot of our clients and high net worth individuals, and he hears it all the time. He's always trying to kind of figure out different ways to, a lot of people are divesting from real estate and looking for an alternative to shift into. So like, can you just hit on the tax side of this and how that works, just so that everybody knows that piece?
Yeah, I'm gonna make one statement before I do that, Chris. I think it's important. I paid an enormous amount of taxes in 40 years. The first thing I learned about halfway through my career is paying taxes is not like the worst thing, because here's why.
It's great.
I pay 37% of my taxes and I can keep the 63%. I now preserve my wealth. Too many investors chase tax write-offs and forget that it should be a fundamentally safe and logical and a profitable investment, because otherwise I should just pay the tax and keep the 63%. So with oil and gas, what these promoters, these crooks, these liars, cheats, and thieves do is they get you hot and lather on tax write-offs. Well, here, let me give you one simple tip. Ready? I get the same tax write-off for a good well as I do a dry hole. You have to look at the well and decide, is it going to make you money? So that's the first thing to remember. Don't get enamored. Look at the economics of whatever you're presented, including with Eckerd, right? After that, let's talk about why there's tax write-offs. In 1986, in the Tax Reform Act, we were hurting as a country. We had very little oil. Oil embargo in the 1970s taking place. Lines 2 miles long to get gas. So Congress came together and said, look, we got to get investors, high net worth income earners, to start moving money to oil and gas and help us drill. We don't have the money. So they provided these huge tax write-offs to say, if you have high income, we'll reward you by helping us find domestic production by giving you these big write-offs. The incentive was right. The direction was right. The motivation was right. So what they've done over the last 30 years is they've simply provided these big front first-year tax write-offs to give you encouragement to allocate those funds toward oil and gas domestically. President Trump, when he took office, changed it favorably and said from his beginning of his term of his office to when he left, it was 100% deductible the year you invested. So if I put $1 million in, I took $1 million off my gross income. Man, a lot of investors ran as fast as they could to oil and gas drilling, which was good, except 90% of those that drilled were with promoters and liars and crooks, so they lost all their money. They had no return. We looked at it and said it was a great opportunity to drill, but I believe we've had one bad well out of 150 wells that we drilled, and we're averaging like 35 to 45% cash on cash return. Some of them made 2 to 3 times their money in less than 4 years. So what we do is focus on what's economic, and the tax benefits are given. Now, not only do you get today under the Biden administration, 80% to 90% of what you invest is deductible this year. The balance is deductible over the next 5 years because it's depreciation and amortization. Here's the sad part. Our wells are so good, you never get that extra 20% because we're giving you back your money in 18 to 24 months or faster. So I look at it and say, okay, this is, Troy takes $1 million, invest in 2024. I'll take that $800,000 deduction. Cash flow comes in. I start making my money back into this year, beginning of next year. I'll invest the same $1 million next year, but now I've got maybe $600,000 or $800,000 income off this year's $1 million. I just keep compounding it. So if you do that over the next 10 years, your portfolio and energy, your oil and gas well just keeps growing. But now you're investing your income plus your income off your wells, and you're just compounding, building wealth, because in each one of those wells is reserves that you now have are proven producing reserves that'll last 25 to 100 years. That's what it's supposed to be designed to do. Investors get caught up in the tax write-off, and when they drill lousy wells, they've lost that $1 million. They don't get the compounding. Plus, they get very disenchanted with oil and gas because they're like, I thought I was going to make money. Instead, I got this truly 100% write-off because I got dry holes or bad operators or Ponzi schemes. So what I get from our education is take the tax as a given. Let's focus on the economic value of what I'm going to drill. Then I'm going to take next year's income from my occupation, from my job, my other investments, use that plus the income off my wells I drilled this year, and I just keep increasing that and compounding it. All of a sudden, I get this massive portfolio in a decade of oil and gas producing wells, and I'm using taxes that I save from paying the government to help me build and create my own wealth. Plus 15% of my income is tax-free. So that's what you're supposed to do, and that's how it works. But most of these guys, Chris, are just short-term promoters. They only want to get you in one deal. They have no intention of making you money. So from a sophisticated investor perspective, you talk to these promoters, they don't have a plan. It's like a guy selling you watches on the street. You want to buy a watch? Yeah, well, it's a lifetime guarantee, sure, until you're down at the next block, and that lifetime guarantee is worthless. Having been around since 1985, having owned my own FINRA firm for 22 years, I built everything on transparency, accessibility, and education. I want you to be the smartest oil and gas investor that there possibly can be. Why? If you question me, if you challenge me, if you give me those questions, I'm going to improve what I'm doing, because as a sophisticated investor, whether it's real estate, crypto, or oil and gas, you're going to make those sponsors be better and better and better what they do, because they're not, you're not going to invest with them. That's what the top 5% of all millionaires demand, is you must educate me. I just don't want to make an investment because I happen to have money. That's the difference.
I think that was, one of the things you said there, let me get us all back up on here, that I think was really important is, like, don't let the tax man wag the tail, or however you said that. But, like, think about it this way, like, yeah, there's great tax incentives, but, if you get the tax incentive, but you lose all your money, great. But really, what if you didn't lose your money? You got the tax write-off, but then it started kicking off an income. Let's just call it 30%. What's your tax rate? 30%. So if you made 30%, okay, in gains, and your tax rate's 30%, really your gains paid your taxes. Yes, you got to pay tax on the new money, but like, that's the one thing, like, and listen, I've seen it so many times. A lot of people make such drastic decisions because they don't want to pay taxes. Troy, I got to give you this one. Like, I had this one guy, and pretty wealthy guy, did really well in stocks, and he wanted to invest in this real estate deal. And I said, okay, great. And he had to sell some stocks. But when he looked at selling the stocks, which were way up, he's like, I got to pay taxes on all this, so I'm not going to do the deal. And I said, okay, you're going to pay tax on that someday anyway. Why not now when you got all these gains? Like, it seems like a really good time to exit those stocks. Even if you got to pay taxes, you're going to make more in the future. And he decided not to do the deal. And I said to him, like, I was kind of pissed because he put me in a rough situation. I said to him, hey, I got some really good advice for you. I can't give you tax advice, but I'm going to give you tax advice. Here's what you do. If you don't ever want to pay tax, hang on to that stock. Wait for the next downturn in the market. Wait for that stock to go down below what you actually paid for it, then sell it. And you got yourself a tax write-off, and you never have to pay the taxman anything. And then you can take that write-off and go. Like, I know everybody, like, when you listen to that sounds so stupid, but that's literally how people think. They will hold on to something until it's at a loss, and then fear kicks in and they sell it. Like, you'd be better off just paying the damn taxes, or put it into an investment that actually pays you, and then pay the taxes out of the investment's earnings. It's just so much more logical.
I'm going to give you a sample of what we deal with here. So let's say 3 years ago, we drilled some wells, phenomenal wells, came online, just perfect timing, all that kind of good stuff. And we drilled in January. So the tax write-off is going to be that fiscal year, let's call it 2021. And that tax write-off was going to be in 2021. But the oil company drilled the wells, put them online. They came on so good. The first check went out in November the same year. It was an 89% return first check. I had one of my petroleum engineer clients pissed off at me, and he said, I just lost my tax write-off. I go, because I gave you 89% on your first check on these awesome wells, you're mad at me? He goes, well, yeah, I don't have a tax write-off. I go, well, then you better buy something in December. And I said, here's the deal. If you're so hell-bent on tax write-off, I will drill you the next 4 dry holes. 100%, I'll put you all your money on the next dry holes I drill, but we haven't hit any. But it's kind of one of those deals where I think the financial planners, I think the financial sector has trained everybody like dogs to chase tax write-offs, because that's where all the bad deals are, but all the fees are, right? The fees, the bad deals.
Very true.
And so from that standpoint, as an investor, you got to be strong enough to use the tax laws and the tax benefits to navigate successful investing. So for example, when you look at the Roth conversion, I didn't know this. One of my clients figured it out. He invested in a self-directed IRA about 5 years ago. He took our portfolio and sent it to a third-party appraiser that followed the SEC and the IRS rules for evaluating reserves. When we buy minerals, we have a certain value for the producing wells. Then there's the fair market value for the minerals that says, hey, there's going to be another 10 or 15 wells. So IRS says it's worth 5,000 acre. The market says it's worth 10. We buy it for 10, right? Our partner's in for 50. He took his IRA portfolio, sent it to this appraiser. She comes back with a report like the size of a yellow page and says, I think your $1 million, I can demonstrate it's worth $400,000. He goes, great. I'll go from a traditional IRA to a Roth, and I just lowered it by 60%. Well, he shared that at our private equity partner conference with 200 other investors, said, this is what I did, and here's my report. They're like, oh my God, I can start moving self-directed IRA into Roth with a 40, 50, 60% reduction. I said, I'm not going to help you because I don't want the IRS claiming that this is just a default. I want it to be true and legitimate and defensible by a third-party appraiser that has no affiliation with me whatsoever. So, man, that has become a massive tool for all of our investors. You then look at the other things you have going on between, like you said, do I sell? I have clients that are mad at me today. They're like, I sold that piece of property 3 years ago to get your minerals. I'm making 16% with you, but I probably could have made more on that real estate. I said, you sold it at the top of the market and now it's about 20% worth less value. What's your problem? Oh, I don't know. Investors are confused. They need a piece of paper. Three things. What do I want? Preservation of capital, reliable management and asset direction, and I want an income rate that is 10% or higher with minimal chance of loss of that income, meaning disruption, right? If that's your category, then everything else should fall in that category, right? I hope I make $50 million this year and I owe the IRS 37% of that. Why? That means that I had a great year. I literally pay a lot of money in taxes knowing I control drilling and I choose not to drill wells. Why? I don't want to lose the 67%. I tell my clients every year, I'm not drilling right now. Why not? Can't find anything that meets my buy box. Well, we got to have tax write-off. Go, I'm paying my taxes unless I find a grade A opportunity. It's frustrating because they've been trained to chase tax write-offs. But the truth is, if my name goes on it, it is a sign of I approve it and I'm going to take and put my own money into it. That's what's critical.
I love that. I love that. So we got a lot of questions. So let's
go for it.
Let's hit some of these questions.
I will be short each question, I promise.
So Peter, what's up, Peter? He's asking, what is the minimum investment? So I've never had this discussion with you because we've always just talked education-wise, but I guess people are going right down and saying, all right, what's the minimum?
So I like to answer that with sarcasm. There is no minimum. I'm not looking for minimum investment. Minimum investors like being a midget in the NBA. I look at it and say it's real simple. You need to decide you want to be in the space, and then you need to decide how you want to address that space. So to me, this is capital deployment. So we did last year about $275 million in mineral acquisitions. Our average partner's got about $600,000 spread across 15 or 20 portfolios. So the minimum per portfolio is $25,000, but what we want to really do is have you look at how you decide to move assets around. So we're looking for somebody that's probably thinking a minimum of investment capital with us, about $250,000 to $500,000 over the next 12 to 18 months. I can't build you a brick house with one brick. So it is $25,000, but think about $250,000 to $500,000, or otherwise you're better off buying public stock.
Holy crap. Did you all hear that? Like diversification within this, like that's what he's saying, and doing it over time. It's everything that Stephen and I say all the time to you. Like when we're talking about like your lending and everything you're doing with being your own bank, remember how we're never saying just don't go all in one, like spread it out. That's what Private Money Club's all about. Like you got a universe of deals to pick from. So that's exactly what Troy's talking about. Is just, we want to diversify this. I love that. I love that. Peter, hopefully that answered your question. All right, on to Melissa. Melissa said, I hear that oil may not be traded in US dollars anymore. Will this impact the strategy at all? Well, I don't know if I'll be around when that day happens, but I'll let you hit that one, Troy, with the BRICS and everything that's going on over there with Russia and China and India.
I'm going to be as matter of fact as I can. We put sanctions on Russia 2 years ago and said no one can buy oil from Russia, and you can't buy it using the normal trading process. And so Russia came back and said, oh, okay, really? Well, you all need oil to run your countries. And so what you're going to do is you're going to buy it in rubles. And you're going to buy it in rubles because that's what we need. And our ruble has depreciated because of the war. So what we're going to do is say, if you want your oil, which means survive and turn on your light switch, you're going to buy in rubles. Rubles went to an all-time high in currency value.
Yes, they did.
And actually, Russia has doubled their reserves as far as proven reserves in the last 2.5 years since they started the war, because their revenue was so high because the value of the ruble was so high. The U.S. controls the globe when it comes to the dollar's strength. BRIC will not work. Why? 2 communist countries, 3 counting North Korea, and then you have Brazil, who's just a puppet master for the Chinese, right? No one's going to trade and count on that BRIC currency for any reliability, which is why the dollar keeps going from 103 to 115. So the whole practicality is, for the last 40 years, I've heard how the dollar is going to be no longer the leader in global currency. I tell you what, I will die in 20 or 30 years. My grandkids will be around and the dollar will still be the #1 currency in the planet Earth.
I fully agree with that. And I know there's a ton of talk about it, in China and everything else, but like you really need to do some research and educate yourself on these other currencies that are making up the BRICS. They have no chance. Even combined, they have no chance. If it was Switzerland or the Swiss franc kind of challenging us, I'd say, well, They might have it, but they're not big enough, and it will never happen. The Swiss franc will always probably be a good currency, but the dollar is the all reigning champion. And I just can't see any way that the BRICS or any of these other nations are going to knock it off its pedestal inside of maybe my lifetime, but I won't give a shit at that point, but maybe it happens, but it's not something that anyone should make decisions today based on. I think it would be a big mistake. But good question, Melissa. Leanne said, how do you purchase the mineral rights? So I guess, how would they, set up a call or get involved? Again, Troy, like, it's kind of funny. We've never had this discussion. I don't even know. I mean, we've always just educated, and, on the podcast, we just talked about, hey, what is this space? So I guess I'm just as equally interested as all the other folks.
Well, and I saw a couple other questions that popped up about, is this a Reg D offering? So let me tell you what we did. I don't like syndications. We have a couple, but I don't like them. I don't like them because
we hate on syndication. So you're in good company here.
It's costly, it's expensive, and here's what happens. The person who creates it becomes God. And everything in there written by his attorney says you're investing and it's worse than sticky glue. You can't get out. You get no communication, no distribution. And when you sue them, they got all these ways of saying, well, you agreed to it, so too bad. So what we did, we created a purchase sale agreement. So for example, we've got a $20 million portfolio today. You can buy 25,000, you can buy all 20 million. You sign a purchase sale agreement. We already own the minerals, which is deeded and titled with all the legal description. All those deeds are filed in the courthouse where the minerals are bought under our name. When you buy under a purchase sale agreement, we will say, okay, I put in $1 million out of the 20 million, so I own 5%. You'll get an exhibit that shows you all the minerals in that portfolio, and it shows you own 5% of all the minerals. You don't have to win the lottery ticket. You get your share percentage of every mineral tract in that portfolio. We hold title so we can do all the back office work, all the accounting, all the revenue. We do that for free, no management charge. And what you get is a check every month. But on the app that we created called Eckert Insights, as soon as you invest within like 30 days, your portfolio goes on. Now you have all your deeds, all your records showing that match that exhibit, match your purchase sale agreement. You get sick of my ugly face and my voice after 6 months, go, I'm out. You have two ways of handling that. We can assign you your minerals. Now you get your check straight from the oil company, but now you got to manage it. Or you go on to the second feature of our app, which is called peer-to-peer. You say, I just don't like this guy. I'm going to sell my minerals. You put it on our peer-to-peer, and you got 2,000 other accredited high net worth investors that are buying and selling minerals on our peer-to-peer. We would spend a lot of money to create a liquidity component to our site. Those books behind me represent new clients just in the last week. So what we want to do is assure you this isn't like a lifetime marriage. You buy, you invest, you have a way to get out, but more importantly is it's a simple process. It's deeded title real estate. It's like owning a block or a parcel of land. It's yours. We simply manage it for you for free. That's what we do.
Fantastic. Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action, like so many others have, by going to privatemoneyclub.com and sign up. Derek Long, a pretty interesting one. So Derek, he was saying in the chat, early on when we were bringing you on, that he's in oil. He's been getting checks in minerals. So he has a question. He said, with the rising prices of oil and gas right now, is it too late to get into an investment?
Yeah, I would say that's a great question. I think what fundamentally happens is, it's like always, the saying is always, is the bloom off the bush? Is am I a day late and a dollar short? It's always fundamentals, right? So when I had oil prices at negative 37 in 2020 during COVID, everybody's like, oh my God, oil's gone, green energy's coming. Well, here's the reality. Everything is about the buy price. So if oil goes to $140 a barrel, the seller's going to want more because the commodity's worth more. But at the same time, if I can figure out how to buy it at the right price, I can make money when oil's at $140 a barrel. I can also make a lot of money in minerals when oil's at $35 a barrel. You always make your money in the buy side. So what our team has done is created the financial model based on the minerals we're buying, the price we pay, the revenue coming from the wells that are already online, what the current permits and applications of new wells are coming online. And that's why we have a full-time engineer. We're modeling it. So our goal is simple. Number one rule, preservation capital. Number two rule, double-digit returns of more over 5 years. Number three, only major oil companies. Number four, more than one reservoir, which means we have several bites of the apple. So by adhering to that buy box, we're able to look at every transaction from the standpoint of what does it look like today, whether it's high or low, what's the best price. Now you can look back in the rearview mirror and go, how much should I have bought in 2020? Everything I could, because it was the cheapest I've ever seen minerals. What should I buy today in 2024? Minerals are down 25% from last year's price because there's no cash. Nobody can get bank financing, so there's very few cash buyers. So sellers are faced with, if they need to sell and they want to sell, they only have about maybe 1 out of 4 buyers in the market today from last year. Eckerd is the #1 mineral buyer in the state of Oklahoma, which means we demand the best price of the highest valued minerals. We're it. Sorry, I'm the ugliest girl at the dance, but I'm the only one that can dance. So that makes it easier.
Awesome. Drew has 2 back-to-back questions. One is, how do commodity prices impact your monthly income?
Yep, that's simple. If we're selling 100,000 barrels of oil from our wells this month at 70 and it's $90 next month, we get an immediate impact. Most oil companies like Continental, Exxon, they have these long-term contracts with refineries. They're getting the very best prices because they control all the pipelines and refineries. So one advantage by buying minerals out of these majors, we're getting the benefit of our share of the oil and gas for our royalty sold at the very best prices because the biggest oil companies drill the wells on our property. So that's good. The second thing about commodity prices is it does affect the activation. The more economically viable it is for those oil companies to drill more wells, the more wells they're going to drill. We want our minerals to be drilled like a pincushion. So if you get $40 oil and the margins are thin, they're going to drill less wells. You get too high oil and gas prices, now coal and wind and solar become equal. People start switching to alternative energy. So the sweet spot today, we want oil between $90 and $100 a barrel and natural gas $2.50 to $3.50. That's really good economics to drill, and not so much we invite alternative energy to compete with us. So there is a sweet spot. Greed does kill. We don't want too high prices.
Nice. And then Drew also said, what does the life cycle of this investment look like? Sounds like a 9-month lag to cash flow. What kind of rates of returns are seen? Is there any type of cash out refinance that takes place with this?
There's no financing in oil and gas. If we had $100 million in minerals and went to the bank, they'd lend us $25 million. They want 99% of our revenue. You don't finance oil and gas. It's a straight cash offer. We paid $750 million in cash. The second thing is that let's get the income straight. When you drill wells, it's about 9 months to 12 months. When you buy minerals, you're getting a check within 180 days. Because at the time we buy our minerals, they're already producing. So let's just use an example. The mineral package we have this month in January, we bought them back in September, October, November in our inventory. The minute we purchased them, we filed that deed of record. We sent that deed stamp to the oil company saying, we own them as of September 1st. We got 4 months worth of revenue. It's just going through those billion-dollar companies till we receive our check. So as an investor, if you bought in this package this month, you're probably looking at your first revenue in probably April or May. So within 180 days on minerals, within 9 months to a year on drilling, because it takes longer to drill and put them online. So when you look at rates of return in drilling, I'm not drilling any well. I don't think I can make 35 to 60% of my money back in the first 12 distributions. On minerals, all of our models are a minimum of 10%. But if you look at 5 years of our doing this, we're hitting 16.3% cash on cash across all portfolios over 5 years. We've got several of them that are already 100% paid out in less than 5 years. I think we have 20 of our portfolios that are over 75% return in less than 3 years. This month alone, we kicked out almost $8.5 million in distributions. And I think we'll do 75 million to 100 million in distribution this year. No cost, no expenses, no fees. Straight cash.
I got really familiar with mineral rights. I mean, it's fascinating, but I think the way to play the mineral rights is like you just mentioned, like it's not like a real estate deal, folks, where, you know, you lend money, you get your return, but then, you know, they sell the property, refi it or whatever, and you get your money back. With this, you want to think about it like, I'm going to invest in this for various reasons that check the boxes for you. I'm going to get a check, and those checks that you're getting, think of it as, okay, how long would it take you to get your investment back? Then you're whole, right? Let's call it 3 or 5 years. Now you got all your money back.
Yeah.
Then you heard it already, in perpetuity, you're getting a check, and that check just keeps rolling. So that's how you kind of want to look at the mineral side of this. At least that's how I look at it. It's just a check. You just get you're basically putting your money to work, and it's just going to keep producing a check.
And to your point, Chris, what happened is, I can give you an example. I had some minerals I owned in North Dakota back in 2010 and 11. The technology and the economics at that time, I was doing really, really well. So on that particular mineral tract, let's say 2 years ago, I was getting about $3,000 a month on it. Well, unbeknownst to me, the oil company came back in and drilled 6 or 8 more wells. Also, I get a check in December of 2022 for $250,000 instead of $3,000 a month, because those 8 new wells in 90 days of production were so much better because of technology. Here's your $250,000 check. So for me, I look at this and say, the oil companies are farmers. They're simply harvesting whatever's ripe at the time based on demand and technology. But you're talking about these reservoirs are 100 to 500 foot thick with billions of barrels of oil in place. So as an investor, I want to make a reasonable rate of return, 10+% on my minerals, but I know maybe in the 5th or 6th year, they might add 2 or 3 more wells. So I might say revenue starts here. The wells decline over 5 years. I've made back 70% to 100% of my money in 7 years. All of a sudden they drill 4 new wells and I'm back up above where I was when I started because commodity prices are higher. I've already paid out. Now I'm looking at infinity rates of return because I have no principal left. So people always go, well, how does this compare to a rent house? Well, a rent house, I got a leverage, I got debt, I got insurance, I got grass, I got tenants, I got rent forbearance. I have none of that with minerals. What I really have is just straight up income. And if I buy under the right oil companies that have the right development plan, I'm going to be reassured of 2, 3, 4 phases of development over the next 10, 20, 30 years, which means my minerals to my kids and my grandkids are going to be additional revenue generations from initial start rates over the next 30 years. That's why we buy it.
That's freaking awesome. Trevor, I think we already hit that one. You were asking about the return, 12.5 to 20% annualized. Really, there's 2 different strategies here. There's the mineral rights and then the drilling, if I'm saying that right, Troy.
Right, correct.
You know, he just was talking about the mineral rights averaging about 16.5.
That's correct. That's correct. The working interest actually pays out more because you own a bigger chunk of the well. So if I go put $1 million in drilling, I'm going to take that $370,000 tax savings, deduct, roughly 80 to 100% of that $1 million. But when you come online, I own the 80% of the well because the mineral owners own the 20%. So I get a lot more ownership, but I'm taking more risk, right? And one thing to keep in mind, I know this is a big issue with Biden and what he did on the LNG and what everybody's talking about the green energy. Just so everybody knows, the green energy deal has been a false premise the entire time. It doesn't work.
Damn right.
All of it's falling apart today. Trillions of dollars wasted on this false agenda. So the Obama administration decided to screw the oil and gas industry by putting EPA and cutting off water. We need a lot of water to frack our wells. When that was over, Trump took over and released all that, said enough of the nonsense. We then went to record oil and gas production. Biden came in and cut us off the cap and said, if you invest in oil and gas, you got this footprint on your public documents, you're going to be punished. Banks don't lend anymore. We're so good, they cut us off our cash. We still survived and grew our business from 11 million barrels to 13 million barrels because we're resilient SOBs. So Biden came up and said, how am I going to stop this oil and gas industry? Well, let's cut off the LNG exports by delaying the permits. All he's guaranteed is higher prices because you're killing the supply side. It'd be different if oil and gas was a luxury item, right? It's not. We consume 21.7 million barrels a day. Whether you're homeless or a guy that's just out and owns 100 cars, you're burning a barrel of oil holding up that I will work food sign or that marker. So I'm confident with 40% more demand than we produce. And by the way, you should all know this. We make 13 million barrels a day. 4.7 million of the 13 million barrels we export because we cannot refine this high gravity crude oil. So we're only really using about 7.5 to 8 million barrels of what we produce. The rest has to be imported. Biden not only is helping our competition, they're helping our enemies by crushing the oil and gas industry. Now, here's why I don't care. I'm underneath the highest, most valuable, biggest oil companies on planet Earth. They will drill no matter what because they have the money and the capacity to do it. So our tier 1 mineral buying means when there is a shortage of supply, my upside is where I think oil is going to go is north of $100 to $150 a barrel over the next 24 months. So if my model's at $60 or $70 and I think oil is going to 90, 100, 150, what's my return going to be? It's not going to be 16%. It's going to be more in the neighborhood of 25 to 30% cash and cash return.
Quite interesting, folks. Like, listen, on that, one thing that would help all of you to really understand, oil and why it's not going anywhere, contrary to what politicians are in office and everything else. Like, let me give you a book. And anybody that's seriously interested in learning about geopolitics, which will sum it all up, this book, it's called The End of the World is Just the Beginning. Great book. You must read it. It will define everything he just said in utmost detail, but it will also go into what's happening today. Literally, this book was written years ago. And in this book, he's talking about geopolitics. He's talking about what happens to shipping lanes being attacked by pirates and everything else, and how it's all breaking down. What was created after World War II is all falling apart now. I'm not going to say it's because of the dude, but it's all falling apart. And how strong the U.S. is positioned right now for everything that's going to be happening globally. What we know of global trade is breaking down as we speak, which I'm not going to say this because I guess it's leading, but makes what he's talking about so unbelievably valuable from a geopolitical standpoint, being in U.S. and doing all this stuff in the U.S. Just read the book if you really want to know. Anyway, back to the questions. What's up, Tracy? Tracy said, can you review the Roth conversion process in more detail using $1 million for the math?
Yeah, so if I had $1 million, if I had $1 million in my IRA, I'd move it to a self-directed IRA so I could do it. Mineral rights or real estate, so it qualifies. I buy into Eckert's portfolio, so I put $1 million. Maybe I do 10 portfolios at 100,000 each. Within about 90 to 180 days after the deeds are filed, after you own, we start getting in revenue. Now you got to do this early on, not late on, and I'll tell you why. You're going to hire. There's 5 different independent appraisers. We give you the list. You choose who you want to. They're going to charge you like $1,000, $1,500, not very much. And they're going to say, I will do an analysis based on the SEC and the IRS's guidelines on evaluating oil and gas reserves, right? What they'll do is they'll analyze it and give you a big fat report that says, your $100,000 in this portfolio, we think based on the PDP, proved developed producing wells, and the wells that are actually given value from the standpoint of the IRS or SEC, we think your $100,000 is worth $55,000. You then can convert that to your Roth IRA at a $55,000 value, not at $100,000, which means you're paying taxes on $55,000, not $100,000. That's a huge tax savings on the 45% value decrease. Now, the reason we stress this is these appraisers are engineering firms or independent qualified oil and gas experts. And the reason why there's a differential, I had one client when we first did this, Chris, just went unglued. Yeah, I paid you $1 million. It's only worth $400,000. I go, you want it to be worth $400,000 to do the conversion. The difference is the SEC and these oil and gas experts only give value based on proved producing wells that are online at the time. The market says I have to buy it based on the wells that are drilled but not turned on, the wells that are permanent applied, and all the reservoirs. You got this mountain of oil and gas in place. I'm buying it for the reserves, not for the 3 or 4 wells online. This is just a great tool to use to make that conversion. So I expect and I want 45 to 60% decrease, which lets me move it from a regular traditional IRA into a Roth, minimizing my taxes. And if you really apply the math correctly, your rate of return is not 16% on that conversion. It puts you more like 24 to 30% return because of the tax savings. Now it's in a Roth. Now all the income generated there is tax-free.
Great. Now I'm hopefully not going to butcher your name, but Mokihana, is that how you say it? But anyway, the question was, are you able to use a self-directed IRA to invest? I mean, answer is, yeah, that's what we've been talking about.
100%, yes.
100%, and highly suggest using a self-directed IRA.
I would say 70% of our investors have used self-directed IRAs and a lot of 1031 exchanges.
And actually, that I'm going to go right to Zach's question, because that's exactly this. It was, where was your question, Zach? Did you say it's eligible for 1031 exchanges?
It is. And what I think our partners like about it, Chris, is that if you're coming out of the top end of the market on traditional real estate, like I don't want to buy somebody else's top end, what do? Well, if I can convert and I have a preset identified portfolio, I can convert and nominate that portfolio with the exhibit showing all the property, and I can do it in a way that immediately puts me in cash flow within 180 days of transfer. So I'm not worried about tenant and NOIs, and I'm not paying this high cap rate for real estate. I'm trying to get out of high and buy low so I can let it build up, and then I use that cash to repurchase back into traditional. It's been a fantastic tool for almost all of our partners that have done the 1031.
And the unique thing is Zach, I was mentioning him earlier, he's a very well-known CPA, so he's got a bunch of questions on this, so you struck a nerve with him. He said, what is the term on this? And I guess maybe just talk both drilling and also the minerals, and how do you sell out if you'd like an average returns? We kind of hit all these, but if you just want to breeze over them again. Yeah,
it's real simple. For one, let's say I'm in working years, so I'm drilling the wells. I got to stay at least 3 years so I don't have any recapture my tax write-off. So I want to at least be in for 36 months to get past that IRS rule of recapture, right? Most investors, they just really want to use that as a tool to reduce taxes, create income, and they don't want to be around for the next 25 years. So we would find a lot of investors say, hey, I've been in it 36, 48 months. I got what I wanted. I got return on my money. I've got some nice profit, and I got my tax write-off. I don't want to be in producing wells, so they'll sell. Well, there's plenty of buyers that'll sell. I buy people out of wells all day long because I love long-term reserves. So that's one exit. The other exit is we created our own online peer-to-peer market. You post, you list, we don't charge a fee. And what happens is you got 2,000 alligators called other high net worth investors that want to buy you out because they love that long-term value. Minerals are the same way. You can go to our app peer-to-peer, or if you own $1 million, $2, $3 million in minerals, say, I don't know if your peer-to-peer is going to give me a fair market value. How do I go sell it? Well, there's places like Clearinghouse and other oil and gas, I guess, online auctions you can go sell it to. But you're going to find that with the high net worth investors and the sophisticated partners we have of engineers, geologists, et cetera, we've been watching our peer-to-peer market just be snapped up like crazy as soon as it's posted because most of these guys know what the long-term value is. So Getting out is not difficult in my view. Understanding the market value is not difficult as you posted on the peer-to-peer, but it is really one of those where I believe maybe 10% of our partners are looking at this as a short-term, get the taxes, get the cash and exit. Even those who started out that way have now converted and said, why would I sell it? There's no holding costs, no property taxes. I like it. I love what I'm getting. I mean, this month we sent out $8.5 million in cash. They were like, wow, unbelievable. So one portfolio alone did 14% return with just this check in January, 1 month.
That's awesome. Helen said, what should we do? Use our Roth, or how do we invest with you? So I guess you give them the menu of how they could invest. I mean, really, it's anything.
If I got $1 million in stocks and I'm kind of worried the stock market's at the top of the market, I'm not going to worry.
It is, just so you know. I don't know if you've heard, but the stock market is at the top.
Yeah. Oh, I know it is. I don't. I've been out for 2 years.
That's all. I'm just being an asshole.
No, I'm in your camp 150%. I'm just saying that if you had $1 million in stocks, you go, I'm just a little dicey. I've made some nice returns. But don't worry about your 22% capital gains. What you want to do is say, how do I get on a new horse that is a long-term horse that's going to generate without exposure to the public market that return? I'm going to pay my 22% capital gains, and I'm going to invest in minerals. I'm going to invest in working interest. So let's just go through that process. That is direct, ordinary income, ordinary portfolio management. But if I happen to have this buildup in my 401k, my IRA, what's the purpose of a self-directed IRA? I'm going to take it out of my 401k. I'm going to open an account with a self-directed IRA, which means I get to choose. I'm then going to invest that money, and I want nothing but income because I don't want to reduce the basis of my money in my retirement account. I want that retirement account to grow without income tax being paid. Well, what better way than to have 12 checks a month going into your account, building it without paying the tax? And I want to do that over the next 10 or 20 years. When I then have to take out my mandatory withdrawals, I'm doing it at my tax rate, which should be much lower when I'm 69 or 70. That is a compound effect because the month-to-month distribution, plus I get to do it without any expenses or any exposure to downside. From the standpoint, it just keeps growing cash flow. So I got a choice: direct asset, self-directed IRA, or then I look at it and say, well, how about a 1031? Well, I've got a couple rent houses. I'm tired of that tenant calling me. I want to sell. I want to get rid of it, but I want to definitely avoid the 22% tax. Let me roll that over and buy 200,000, 300,000 worth of minerals. Now I've done what? I've increased my purchase power by the 22% by doing a 1031, and I'm buying immediate cash flowing assets, not one tenant with one rent. Now, like in the current portfolio, it has 253 wells in it from day one. I've got 253 cash flowing assets, not a single tenant. That is what I want to do by managing my money, decreasing my risk, decreasing my capital as I get older. I don't want headaches. I want to sit on that beach and have 7,000 wells making money every single day.
All right. Zach said, and these are, again, we kind of hit these, but I think it's really good that everybody hears this again. It's kind of the legacy play. So somebody invests in this and then something happens. What is the succession play on how this kind of an investment would play out?
Unfortunately, last year we had several partners that passed away. We had a couple of suicides. We had a couple of cancer. I mean, it happens, right? A couple of heart attacks. What happens is they notify us, hey, Mr. Johnson, who owns the title, he's my husband. Here's my proof that I'm managing the estate. We'd like to transfer the ownership to, according to the will, what happens. We get the document, it transfers. The effective date is the date of the death. We transfer, it's an internal document. Now the revenue goes to the appropriate parties within the estate. What's really nice about this is a simple deed, simple title. On your purchase sale agreement with us, we recognize the owner. Once we get the estate and the will's directions, we then assign it out. We've got clients that have passed away and said, here, my 8 grandkids get 1/8 each, just immediate transfer. See, the nice part about us in our accounting, we get all these big checks in from the oil companies, these massive statements about all the loads of oil and gas being produced. We dump that into our system, and then our system's simple. It's just a check. We don't have any offset expenses. So, $8 million in, we drop in all the wells, all the details, and then it goes to each portfolio where each well is. Here's your check. So there's no bills, there's no invoices. It's a big system. It takes us, 3 days to run our revenue cycles. We have 7,000 wells, but one thing I like about it, it's only green envelopes going out with checks in it. So that's what we're known for, is those green envelopes.
Now, and then this is the second part to that question. And I know, this is kind of far out there, but, because you're only in your 30s, Troy, but what is your succession plan? Because if these things go on in perpetuity, I guess it's a good question to ask. What is the succession for you?
Well, I was pretty much the Troy Eckert show with my family business up until about 8 years ago. And I started having grandkids. And so I did a couple of things. One is I stopped drinking alcohol. Number two, I started changing just my health-wise. I lost about 20, 30 pounds. But I also realized in order for me to have the ability to build this business model, I had to have depth to my team. So I basically put a management team underneath me. I've got 6 managers that are the CEO, COO, CFO behind me. We then backfilled that with an accounting team, a land team, and engineers. And I always joke with them. I said, other than me, if I drop dead in the parking lot today, other than my funny jokes and my cute face, nothing would stop here, right? I always tell my team, the only thing that's really going to stop is that the fear of investors talking to me, knowing they're going to give me money, because there's no way you're not going to make logic out of being in oil and gas. Other than me raising capital, they're not going to miss a beat. Now, I only say that being facetious because they have created such a system. If you have time, you should go to EckerdEnterprise.com and look up Eckerd Insights, which is our app inside of our website. And what that is, we spent about $3 million. It's the only natural resources alternative asset app like it is. You can sign up, you don't have to invest, and you get access to all of our education, all of our information. When you become a partner, you then have your own account. Now, what it does, it gives you every piece of educational information, all the industry data, all your deeds, all your portfolios, down to the individual mineral tract. You'll see how each mineral tract performs. Now, we spent that money, made that investment for exactly the question Chris asked. What if Troy drops dead? And what we wanted to say is that because of the automation of the world today, we can extrapolate that from the tax office, the production office. This is real-time data that you can go find on your own that underpins your assets to know we're telling the truth, not stealing money, not skimming off the top. And if Troy gets caught by a car, I know what I own. And then what we do also, Chris, is we provide an annual report, both digitally and in hard copy. And what it says is, here's every well you own and every mineral you own, both in hard copy and digital. Well, why do you send it hard copy if digital is good? What if I turn off the system tomorrow because I'm a crook? I want you to have it in hard copy so I can't be a crook and turn off, because that's what's happening to all these multifamilies. They're not communicating. They're not sharing data because they don't want to. I want you to know I'm giving you what I would expect. You're a nice person. I don't trust anybody. So therefore, we'll agree that you're doing a great job, but one day you might get hit in the head and decide to become a crook. I want digital. I want hard copy. I want transparency. And I want to know Troy has a team behind us that I can ask anybody I want any question, because it's an open door policy. And I'm not going to get a different answer because I asked 2 different people.
Love it. Chris Ash asked, what do you think is behind the decision by the dude? We call Biden the dude.
The dude, yeah.
I keep getting shut down every time I mention his name on TikTok. So the Biden administration to halt LNG exports.
What happened is, this is interesting because I haven't seen a single person analyze it correctly in my view. Here's what happened. All these oil wells we're producing have a lot of gas. So think about percolating a pot of rice. The rice is the oil, the steam is the gas. So because we answered the call globally to make up energy supply when Russia went to war, LNG was the favored product, clean natural gas. So projects that were delayed, underfunded, immediately got funded. Germany built an LNG facility in 200 days. In the US, it takes us 4 years because of regulation. They did it in 200 days from scratch. So what happened is, we're successfully exporting 4.7 million barrels of oil. Well, that's pissing off Saudi and OPEC and Russia, because now we're not only buying their oil, we're now providing oil to their customers. Well, that's this administration's desire, is to be allies with the enemy and the communist countries that are out there. So what he decided is he couldn't stop us. We're smart. We figured out how to export 4.7 million barrels. We responded to the Russian war 2 years ago by doubling and tripling our export of LNG. So he says, how do we stop these oil guys? They're like cockroaches. They don't go away. They just keep hanging around. Okay, here's what we do. I'm going to delay the permits for LNG. Now, why is that important? You have to have 2 components to make a liquefied natural gas work. You got to have supply that's guaranteed, and then you got to have a customer who's going to buy it. Otherwise, you can't get a permit and you can't get through the process to build an LNG facility. What's the best way to run off your customer? Tell them, I don't know if I'm going to be open tomorrow to sell you that hamburger because I can't find any meat or buns. So you might have to find a taco stand because no hamburgers tomorrow. By shutting down the permits, all this future gas supply means when I go out to try to get a buyer of my LNG that's coming online in 2026 goes, you guys are unreliable. What if the current administration stays in office? What if the GOP wins and it's only for 4 years and then back to the liberal ideology of getting rid of fossil fuels happens again? We better go buy our LNG from Qatar or somebody else. What does it do? It takes those countries who hate us and guarantees them a stronger position in global supply. You don't get rid of natural gas. You just give that business to somebody else. So what it's done to us, not only is it shutting off natural gas from like the Haynesville in East Texas and Louisiana or the Marcellus in Pennsylvania, but all these big oil wells in the Permian Basin, they're now being affected because those oil companies are saying, we currently have all this gas, this steam from that pot of rice. We were going to send it through LNG. Now we can't. we're not going to be able to drill as many because guess many new wells because why? We can't flare the gas. We got to sell it. If they can't get rid of it, we got to drill less wells. Here's what's going to happen. Supply is going to come down. Rig count's going to come down. Oil price is going to go through the roof. You're about to see hyperinflation in the next 24 months. And that's going to be predicated on the cost of debt, compounded by the price of increased oil and gas prices. And here's the deal, folks. I got to be honest with you. If you're not in the game, don't worry about the rules of the game. If you're not in energy, you're my customer. So it's real simple. I say this all the time. I talk to millionaires and billionaires every day. And here's what I say. You're worried about oil and gas. Don't worry. Either way, I win. Why? You're either my partner investing with me and you own it, and we're selling the ice cream at the edge of the desert, or you're my customer because you can't wipe your butt or brush your teeth without a barrel of my oil. And that's how I feel. So if I'm you and I'm accredited and I have money and I am worried about what's going in the market, the number one thing you want to buy, not a single public company operates a single day in this country in that stock market without buying a barrel of oil or an MCF of gas. If you want to be 100% in the business of consumption, you better be in oil and gas and own it, not through the stock market, because that's what my clients have decided.
Love it. Just trying to answer some of these as they're coming in. Aknot, what's up, Aknot? Give me a call after we're done with this. I got something interesting to talk to you about. But his question is, if you do a self-directed IRA, do I lose the depreciation benefits of IDC?
Well, you don't ever want to drill inside. You don't ever want to drill inside your IRA because you need those tax deductions against your active income, right? So you don't ever want to drill inside of an IRA. You do not get the 15% reduction in income tax inside your IRA either. So if I invest in my IRA, it's true dollar for dollar. Outside, I get the 15% depletion allowance and I get the tax write-off. So remember, I just want to remind everybody, I made this mistake 20 years ago. The only thing you should put in that retirement account is virtually 100% probability of success. You don't want to lose any money inside that IRA. So if you're going to drill, there's always a chance drill bit gets twisted off, whatever. That needs to be active income. In the IRA, I know we all have other money, but that is truly your holy grail of I only want growth in income and I want to delay the taxes and let it compound. So I only want to win. Anything that has a deduction must be outside.
Wow. So we actually got through, folks, that was crazy amount of questions. That was 26 questions we just knocked out. Troy, that was amazing. So, and I know we put your website up in there, but is that how people would get a hold of you if they were interested in investing? Would they just go to the website or where should we send them?
Yeah, you can go to the website. I mean, honestly, just go to the website, sign up for the app. Let me just tell you how I run my business. Everybody here's salary. I have nobody on compensation based on sales. You can call in and put 25,000 or 2.5 million. I have 8 extremely well-trained wealth managers. They get paid a salary. They don't care what you invest. Their job is to service your account. Client service is paramount to me. It is Ritz-Carlton level service, okay? So if you want to invest or you want to consider investing, first thing is I tell you, sign up with the app. It's accredited investors only. But when you sign up, even if you're not accredited, you can sign up to the app and get all the information. You still get some of the relative investment opportunities because you're not accredited, but you still get education. So anybody can sign up. But once you sign up, our wealth team will be notified that, hey, I'm interested, I'm accredited. Please show me what you're doing. I tell my team all the time, show them previous portfolios. We want no pressure. We're not under pressure. Today, we have a $20 million portfolio. I already own it. I'm under no pressure. I'm buying another $20 million this next month. I like the position we're in, which is we have zero pressure to sell a single thing. It's more about compounding our opportunity by using you as my financial partners and co-owners to go buy more and more minerals because the market is void of capital right now. So now's the time to buy. And that's really where the advantage comes between me finding it and you participating with me.
Oh man, that's fantastic stuff. Did you all like that? Like totally different than what we normally do, but we met Troy. Troy's got just an unbelievable reputation in the circles that we're in the oil space. That's a very difficult thing to do for as long as he's done this. So that was first thing that piqued my interest. I heard him on another webinar. I'm like, oh my gosh, I got to have him on my podcast. He came on my podcast. I was like, this is the guy for Wealth Webinar. And I am so fussy about who we bring on here because we've just had some, I don't want to say that we didn't have any bad actors on here, but we had some things go wrong when we brought them on here. So we're being extra cautious. So Troy, thank you for what you do. Thank you for your level of transparency and your dedication to that Ritz-Carlton level of service. I totally commend you for that. And I appreciate you coming on the Wealth Webinar today.
No problem, my friend. And you need to tell your audience too, if you're going to look at another oil and gas deal, send it to me. I'm not going to beat them up because they're my competitor. I'm going to tell you how I analyze it. And I'll send you back what I think, and then you make your own decision. But the ideal for Chris, your show, and what I do is We're helping these investors navigate opportunities and avoid the pitfalls of bad actors and bad investments. And I love the way your show is. You're like me, you're just blunt. We both know there's a Category 5 hurricane coming. It's upon us. The outer band's already here. I had a big meeting last week in Austin with like 25 of my top partners, and we sat around and talked about the economy, and they're all like, we're hunkered down. Now, let me tell you what you said is correct. Cash in your bank is a bad investment. Whatever you do, you're trying to outrun inflation. You're doing it prudently. You're trying to be smart. You want guys like Chris and myself that are just going to hit you in the head with facts because everybody else is trying to get to your money. The guy that's touching you and going, hey, you're a great guy, is stealing your wallet at the same time. You need a warrior leading you, and that's what Chris does every day. When I listen to him, follow him, he's a warrior for the truth, and that's really what you need to have.
But the truth hurts, right, Troy?
It does. Yeah, I tell everybody I'm getting older and ugly, and nobody says, no, you're not. So I know I'm older and ugly. It's just the way it is.
Oh, yeah. I've probably about a year ago, I stopped caring about what I say things. Steven sometimes has to like kind of pull me back a little bit, and I've gotten better, but it's just like, this is the truth. This is what you need to hear. I don't care if you like it, and you're going to face a lot of objections from the people when you tell them this. But if you look back through history, every person with a great idea, every person speaking the truth has usually been ridiculed, burned, killed, or Jesus, we could always go to that one if we had
physically and financially, they get destroyed, right?
Yeah, they get destroyed.
Folks, this is oil. All right, this is black gold. And the reason I hold it up is this is what we're looking for, and we have all we want in this country. We can only refine 60% of it. This is the most basic economic decision you have. 100% customer acceptance, 40% more demand than supply, and you have every single geopolitical event happening today that says oil is going to go higher. Get your black gold, become a partner, figure out how you got to be involved, whether it's public stock with Eckert or somebody else. You better put energy in your portfolio because like a seesaw, when everything else goes bad, oil is going to go higher, and that's going to help you balance how you create your net worth. Hey, Chris, thanks for having me on. If I can do anything else for you, you know how to follow me up with me, and I'm available anytime you need me. And as far as the listeners, if you need help, just email me at t@eckertenterprises.com. I am more than glad to help you navigate maybe a bad investment to avoid or a good investment to get into.
I love that, man. Thanks for holding that out there and just offering to help our audience, navigate this space. And just again, thanks for everything you do.
Problem, my friend. Take care of yourself.
All right, you as well.
Thank you.
All right, folks. Well, questions have been great, but I want to kind of wrap up with just a couple of things. While we got a few minutes left. First things first, we've got an amazing event going on out in Utah. It's coming up soon. It's called Money Tank, Private Money Club's Money Tank event. This will be our third one. It's just anybody that's been on here, a lot of them have been there. It's really just an amazing place to get yourself in a circle with people that think like you do, that want what you do, and that are not the 95% following the path most followed. That's the most important thing. In this journey to wealth, in this journey to what you're trying to do, you heard Troy say it, the path that you want is the one least followed, the path least traveled. Listen, I go into this on every presentation, the 5 and the 95%. Which one do you want to be? You want to be the 5% or the 95%? You know the definition of both. 95% are those that conform to what everybody else is doing. Everybody else is saying. They're the ones that typically are not financially successful. That 5%, that is the group, that is you. Those are the creators. And the 5% are the wealthiest. So I don't make these rules. Social Security prints this. This is the facts. And yes, it hurts that 95% in the greatest country on earth, where opportunities everywhere, are financially insecure. But I hate to say it, but I've finally come to the conclusion, it's their choice. And until they change their mindset, until they start, choosing to create, choosing to focus on their worthy idea and not follow the herds, nothing will ever change. Steven, do you want to talk a little bit about Money Tank?
Yeah, it's the place to be. I mean, it's great to kind of see somebody on the webinars and talk with people, but there's nothing better than being in person. And, like Tess said over in the comments, having dinner together and chatting. And so, not only the education, we have some really dynamic speakers and presenters, but we have some really cool networking activities planned for this one. I mean, we did 2 Money Tanks last year. We've done a lot of live events and masterminds, but specifically for Private Money Club Money Tank. And the first one we did last year, I think, was pretty good. The second one we did was a lot better, was really awesome. And we've learned from both of those. So this next one's going to be the best yet. And it's the place to be. So if you can get out to Salt Lake City, Utah, April 26th and 27th. Spend a couple days with us. I guarantee you'll see a lot of value out of it, and it'll really change the trajectory of, what investing means and looks like for you, just from not only what you learn, but the people that you meet. So,
And just so you know, there's less, I think there's 10 VIP seats left because we only have a limited number of VIP seats, which includes an extra activity day the day before where you get to be around all the other VIP people, and it'll be pretty epic. So there's only, I think, 10, maybe 12 seats left in VIP. Then it's just general admission. We always sell VIP out really quickly. Aiknot will be there, always is. He loves it, but also he'll be there in a whole different capacity because he is the developer of Private Money Club's 3.0 launch. So give a round of applause to Aiknot, Chad, and the whole AOCA team that is literally behind the curtain designing a revolutionary software and technology that is literally going to change the game for how money is funding deals. And that's just the beginning. And one last thing too, I know a lot of you on here, when you listen to the whole thing and then it came to that end where you got to be accredited, and I could see it. It's kind of like your balloon's building up, and then you hear, oh, I got to be accredited, and it pops the balloon. You're like, oh my God, it was so good, but now it's not. So I got one other thing for you, and I'm going to run just a few minutes over. So any of you that are not accredited, that because you wouldn't be able to do what Troy does if you're not accredited, I got another solution for you. Now, this may not be a solution for everyone because every time I let the cat out of the bag, no pun intended, Mr. Cash, it just overfills and then you're on a waiting list, but that's okay. You want to get on the waiting list. And I'm talking about flipping equipment. It's not sexy, but I'm just going to draw it on the board because I've done this twice. Steven's done this. Shauna's done this. My whole team has forklifts. Like, we're pretty soon just going to be known as, not house flippers. We're going to be known as forklift flippers because that's what we're doing. So, we're just talking about buying these stupid things that you see at every Lowe's. They kind of look like this. Sorry, that's a terrible drawing of it. But pretty much that's your forklift. It kind of usually goes a little bit further back. And, you buy the forklift. So here's why you don't need to be accredited for this. You're actually physically owning and buying the piece of equipment. So you buy this. Now, the last one I just bought, it's right here. Okay, this is the sheet. I just sold it. I made $2,374.38. We'll do the math on that. So my forklift was a Toyota, okay, which is a really nice one. I bought it for $20,302.50. Okay, that was my buy-in. Now, in order to get into forklifts, I'm just gonna put it on the board real quick, and you guys can kind of come together. Maybe some of you don't have this much. Find a friend that has the equal amount. Find two people with 25 grand. You're gonna need, because there's so much demand, you're gonna need 50 grand to come to the table for this. 50 grand could get you 2 forklifts, but you're gonna have to basically have 50 grand to play with to even get on the list. I'm just letting you know there's too many people that want these. But mine was 20,000. This is my second forklift. There was a bunch of work done. Now, how this works, and I just want to show this to everybody because I urge everybody to just spend 12 minutes and watch this video, because this video, and you watch it by just going to my website, BYOB, which is a website we made to teach all of you how this whole system of being your own bank works. I'll put it in the chat. You can watch this video. What it shows is it shows me actually going to the facility. I'm fortunate that the gentleman that owns this company is right in my backyard. So we literally go over to the facility and we test drive the damn forklifts. I mean, it's kind of fun. And it shows how it's almost a circle. You hear me all the time talking about BYOB is the circle. Well, his facility is a circle. You buy a used, beat up forklift. This Toyota was beat to hell. Then what they do is they take it around and they renovate it. They put new tires or re-groove the tires. They paint it. They put new decals on. They spray it. They do everything. This video shows all of that. And then at the end, you've got yourself a forklift, which I tell you, you won't know the difference between a brand new one and these used one. They do a phenomenal job. And then he's got a sales team that goes out to the universe of forklift buyers and sells these things. And now on this one, it was $20,302 was the cost of the unit, but we had to renovate it. So my total all-in price for this was $25,964.05. Okay, this is the cost of the beat-up one. The difference is the cost for the renovations. Not too bad, right? This lift sold for $31,964. $900 to another place right here in Buffalo. And the cool part was he was like showing me all the communication between the buyer and himself. So you're right in the mix because you own the damn lift. The lift just never leaves the facility and goes around while it's getting renovated. Now I made $2,300. Okay. Now some of you are like, well, that's not a good return. Well, actually, I want to teach you guys a little bit to do the math. And Stephen, can you help me with some of the math on this? Because you know how to do this too. And I want to talk. I don't want to so much draw.
Yep.
So I made $2,300. Now, who in the chat can tell me how much was the return? What was the return? I put in 25, but actually my cost was 20,000. Okay, but what was my return if I made $2,374.38?
You have 20,000 in it or 25?
This I can't remember how much check was. I think this was my check. And then they put the renovations in. That's their part. Oh, and just so you all know, the profit split is 60-40. Okay, so 60-40. So I get 40% of the total profit. All right, because you can see like that's more than the 2,000 I made. It's because I only get 40% of that. So I think this is the amount of the check I wrote. I'd have to look. Sorry, I don't have that. I just pulled this out real quick. The total profit was $59,35.95, but my 40% of that was $23.74. I'm pretty sure this 5,000 and change was them renovating it.
I think it's 11.7%.
That's what I had, 11.69%.
Okay, sorry.
But that's still not right. So even that, most of you would be like, that's a crappy return. Anyone think that's a good? There you go, 11.6. How many of you think that's the return I actually made? Anyone? Yeah, I love it. Nabel was right. Said for how long? Let's call it 4 months. I think it was a smidgen under 4 months. It took 4 months. My money was in this forklift for 4 months. Who can tell me what my return was? Because it was not 11.69. That's the annualized return. But I did this in 4 months. So if I did this in 4 months, what's 4 divided into 12? That's 3. I could do this 3 times. So really, you'd multiply this times technically 3 times. But who can tell me the return? That's right. Michael said 33%. That.
It's actually 35. So your actual return was at 11.7, but your annualized return is 35.
35%. So everybody understands that, right? Your return annualized 11.69, but I only had money out for 4 months, a little under, and then I got all the money back. Like I got a check for all my money back. So now I'm made whole, but I got the profit in 4 months. So my annualized return, if you were to figure it out, is 35%. Why do you think everybody on my team is trying to get forklifts? Well, first off, you physically own the damn lift. You want to talk about collateral? You own the thing. You know, literally, like if you want to go to the ARC's facility and drive your lift home, great. Like come with a trailer, pick your lift up. You own it. And then they're just keeping it there and facilitating the flip. It'd be like you own the house, but you hire contractors to come in and make it beautiful. It's kind of the same thing, but it's just all easy. That's turnkey. You don't do anything besides buy the lift. So if anyone was interested in this that is not accredited, because obviously we got 2 different things and I'm just trying to make sure that you all get something out of today, you just go to that website that I put up. I'll put it up again. And once you watch it, right underneath, it says contact ARC. Just hit the button, contact him. Be patient, please. He's slammed right now. Like not only are our forklifts selling like crazy, but also he's got a lot of people that want to do this. My advice, just get on the list. If you can't get right in, get on the list. Find a buddy or 2 that, kind of come in and say, hey, listen, we've got, you call ARC and you say, hey, I got 3 guys that want to buy them. We got, 50 or 75 grand we want to do lifts with. Then that bumps you up. I don't mean to say it's all about the money, but he's just trying to kind of facilitate as much as possible. And it's funny, Stephen, I told him this was going to happen. I remember when I first kind of came up with this idea, and it was really for me. This wasn't for all of you, wasn't for Stephen, wasn't for Sean, it was for me. I was in his office talking about IBC because he wanted to start a policy that he was going to use to fund the purchase of forklifts. And I just said to him, and I want to preface something, let me pause. Listen very carefully. If any of you want to make money, you want to be successful, you want to get wealthy, what is it that you must do? Can anyone tell me? You want to get wealthy, you want to get rich, you want to have a bunch of money and be successful. What is it that you must do? Put it in the chat. Bingo, Drew just said it, solve a problem. So what do you think I did when I'm sitting there with ARC? I said, what's your biggest problem with your company? I wanted to know what problem can I solve? And he said, well, just like every business, we always need more money because we can only buy as many lifts as we have money, and there's always more opportunity. So we're missing deals all the time just because we don't have the money, the capital. And I said, ARC, what if I bought the lifts? You see how I didn't say, what if I lend you the money? I'm like, I'm going right for the juggler. I'm like, what if I buy the lifts? What if I actually just buy the damn lifts? And then you do your thing and we figure out a split. And right there that night, over a couple shots of whatever he was given, like this rose-colored stuff that didn't make me feel well. But anyway, we had a deal. And then I just came back and I think I started telling Shauna and some other people here what I did. And then they're calling ARC. And Joe is driving over to ARC's office buying 15 of these damn things. And then we just did this video. We put it on YouTube and it took me probably 6 months to get a second lift. Thanks, everybody. But anyway, that's how it works. That's how it works. You know, there's opportunities, but you got to be patient, folks. You got to get on the list. You got to plant that worthy idea in your mind and you got to continue to work toward it and solve somebody's problem. So that's a wrap for this. Hopefully you guys enjoyed this. Hopefully we'll see a lot of you at Money Tank. The tickets are not expensive. As Stephen put the link up there, we'll put it up one more time. It's a very inexpensive event. We try to make it that way because we want all of you to be able to enjoy it and come to it. We don't want you to kind of get sticker shock. And some of these events are thousands of dollars. This one's $197. That's it for a general admission. VIP is more, but that's because we do some cool stuff and race some ghost carts. And anyway, but try to join us at Money Tank. I think you'll be really happy you did. And you know, also get in Private Money Club because there's a lot of things happening right now. And I can't let the cat out of the bag, but now would be the time. If you're not a member of Private Money Club, let me just tell you, this would be the time to do it. So with that being said, Stephen, anything you want to say as we close out?
No, but go over to YouTube channel after Chris Naugle. Make sure you subscribe. We go live twice a day, every Wednesday, 9:30 a.m., 4:30 p.m. So you don't want to miss those. So it'll give you a little alert if you're subscribed to the channel. This afternoon, we got the Ask Me Anything. And since I was kind of silent today on this webinar, I got a lot to say. So I'm going to be a little crazy this afternoon, if that's okay with everyone. So we'll see you guys there at 4:30 Eastern. We'll have some fun. Other than that, I know Money Tank's still a few months away, but it's already February 1 tomorrow and time flies. So get your travel scheduled. You know, if you can't make it, you just absolutely cannot get there. We do have a virtual option, but we just do so many virtual events. I'd rather you be there in person. So get there in person if you can. And that's going to be a lot of fun. And if you don't want to go out west, we do have Experience Mastermind at the beginning of April in Orlando, Florida. So that's also another way. You're not going to get all the speakers and the education, but you're going to get much closer relationships because it's a more expensive, let's just call it the way it is. It's a more expensive event. It's $5,000 for a ticket. So you're going to get a higher level of people at that event also. So the relationships and partnerships that you make at the mastermind are really going to affect your business and investments, things like that in a big way. So that's another good one too, if you want to stay on the East Coast and hang out with us for a couple of days. Other than that though, Chris, this was really good today. That was really cool by Troy W. Eckert. So I'm Stephen G. Nagy. It's all good.
And I'm Chris M. Naugle. Thanks for joining. Yeah. We'll see you on the next one. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.